Hello, everyone. Welcome to Market Trends. I am David Russell, Global Head of Market Strategy at TradeStation. It's great to be with everyone. As usual, we'd like to show you some disclosures as we begin. We do this webinar every Thursday afternoon at 2 p.m. Eastern. It's great to be with everyone. Putting some important information as well into your chat if you want to check that out. And I will also be giving you, I'll suggest you go to tradestation.com and you click on Insights at the top. It will take you through to my Market Insights blog, and on that blog, you will find an article with some of the main things we're going to be talking about today. So let me just quickly show you. We go to tradestation.com, and then go up here to Insights. This is the actual article in question. I also want to show you guys. I've updated the zip file. So just so you know, here's a zip file where I provide different stuff like empty public materials. Wait a second. Here, here's our new blog. It's called March. The new zip file is called March 2024. So you're on the if you're on this page, you go here. Downloads are available here. If you click on that, it'll bring up the zip file, and you go into the zip file, and it will look like this. Excuse me. All right. So basically, I've added this new thing called Bollinger Bandwidth Range. It's a new indicator I'm going to be sharing with you guys today. It allows you to see companies, the amount of volatility squeeze relative to a company's own history. So that's something that I'll be getting to. It's mentioned at the bottom of the blog post, and I just wanted to just show you that. So let's just close that. All right, so we start with the S&P here, and as I look overall, we've had some data now that has not been, terrific, and I think we have to remember we've had a pretty decent kind of complacent, I'll say a steady move to the upside. And now some people can start to see that this is getting, somewhat complacent. What I want to show here, this is one of the charts I want to start with. So we have a kind of back of the envelope thing we do here when we look at how long the 10-day moving average has been rising. And it's often just a sign of kind of how long has a move lasted. And I think you can see here, this is called the MA streak. It's actually called MA streak chart. And you can change it set to the 10-day moving average, which is also the yellow line on my main chart. As you can see historically, once it rises for more than, this one back here rose for about what, 46, it's like 40. But historically, rising for much more than 30 consecutive trading sessions is unusual. Now, this is to me a very simple back of the envelope sort of method I look at. I don't put a huge amount of stock in it, but it starts to kind of tell me, all right, we're getting to a point where things have been going for a while. Now, I think we know that, and we start to see some of the news kind of weakening. It's something that to be a little bit more wary of. The other thing I want to point out is, when we look at this one, I've been watching a lot the rate of change, and it's a kind of measure kind of momentum and the strength of the move. What's interesting here is we are starting to see the rate of change really start to kind of flatten, and if it starts to go negative, it could really represent a kind of weakening of the trend. And I think right now, the news today with the PPI wasn't great. When you dig into it, you could say, I mean, there are some things that make it not so bad when you're looking at it overall. One of them is the fact that most of the inflation came from things like energy and stuff like that, and the services got better. But also, the CPI recently wasn't great. So at this point, we don't really have anything that is, confirming that things are going to be great. It in terms of confirming that inflation is getting better. It might still get there. There has been some good news, but we're also at a point where the market has run a lot and priced in a lot of news. And at this point in time, the kind of risk reward to the upside might be diminishing. It doesn't mean that anything is clearly bearish or anything like that, but some of the pieces are coming together are giving more of a potentially kind of bearish set of signals. One thing I want to just show you here, if we just very quickly, I'm gonna actually just very quickly open a new chart all by itself to show you, I've showed you inside outside bars before. It's a show me. Let's go here to the SPX.X, go to daily first. So if we look here, last week, we look at this on a weekly, we had an outside week. It's the first outside week in a while, this big kind of spinning top on the weekly. This week, we're inside of that week. So this is now a potential reversal pattern. And we're still kind of holding up positive, but we are trapped inside of that weekly doji. And I think it's important now just to realize that this is now the beginning of a kind of sign of stalling and weakness. Another thing here that kind of also grabbed my attention was that there was also an outside day somewhere. This bearish outside day at the end of last week. So we got rejected out there and we're still below that high. Then we had an inside day yesterday. So in some ways, when you start to see the price action kind of widen and narrow and stuff, it kind of suggests that the kind of strong, just the consistency of higher highs and higher lows not continuing to happen. And I think it's also important to remember that we are entering, kind of the second half of the month with not as much kind of economic, well, not as much news except for the Fed next week. It's looming like this giant thing on the horizon. And so I think right now, that is something where we could have kind of a zombie drift into that with a lot of um, kind of unimportant sort of drifting news and then a lot of activity as we get closer to the Fed. And I think it's kind of important to realize now that the Fed is now looming very large on the horizon. There is a lot of sort of expectation at this point that they're going to remain relatively dovish and everything like that. But again, the question is it what is priced in and what is not? And so this is one of the things I'm now looking at. Don't want to be sounding bearish yet, but from my perspective, some of the risk reward at this point might be pretty well priced into the market for the time being. And if these more recent inflation numbers don't, if they remain the way they are, then the ability of the market to maintain this 1995 style, drift to the upside might be, less than it really is. Now, I want to just let me just see. We also have our MT breadth. This is one of our kind of indicators. But if you look at the number of companies above their 20-day moving average fell pretty sharply here. So I mean, this is also a kind of short-term signal. The advanced decline line is kind of dropping today, kind of more precipitously than you would expect. Most of the strength today is just coming from a handful of the large mega cap tech stocks, which in and of itself is not a huge problem, but it does show that this idea of this broadening rally sort of advance is potentially somewhat priced in. Now I want to just quickly show you here the standardized returns of key ETFs, and then I'm going to talk about something here which is important, which is the semiconductors. We've done several trading view ideas recently about semiconductors, and I'll go here to our trading view ideas. I think it's important to realize, looking at these standardized returns, is it basic? Let me hide myself off the screen. But anyway, we had a large bearish outside day last week in the semiconductors, and that also is now just another sort of thing looming out there. Obviously, semiconductors have been the leading part of the market, and they have now something of a bearish reversal pattern that is starting to look more confirmed because we're remaining below that bearish outside day, as I'm going to show you. If you look over here, some of the things we did on NVIDIA and Advanced Micro, both of these have kind of played out. No, it's going to load here, but you can see this large bearish outside day. And if you look at it, we've more or less remained under. Well, we went under it and we haven't in any way kind of undone it. And today we're remaining to the downside on NVIDIA, Advanced Micro. I'm not sure, but the thing here is if we look now, let's look at the SMH. I've shown you the standardized returns. We can see here, this is a pretty significant pattern. And we're under it. And something like this with a rally of this violence and this strength is not going to necessarily just stop because there was one bearish candle. But these things are starting to confirm that that maybe it's trying to give confirmation of this as a bearish signal. Now, that's this, again, I think it's important to realize like something like this can mark a top for a couple of months or a month or something like that. So I think it's just I don't want to be in any way expressing too much of a sort of negative view. It's just that with the Fed coming and a lot of other things here, we're at a spot where there are arguments now for being more caution and just kind of realizing that we're now entering a period of time where the actual movement is of kind of less importance, and we can see a tight sort of just drifting, and then suddenly all the movement can occur very quickly, like as we get to the Fed or something like that. Like when you go into events like this, it's all just meaningless, and then suddenly the movement that will come on the event is bigger than it'll just engulf several days in like 15 minutes. And that's the sort of thing that now as we get closer to the Fed, we have to be careful of that. All right, so we saw the outside day, the outside week. I showed you how the 10-day moving average has been rising for a long time. So I think those are just some of the things that were kind of jumping up that I wanted to point out. Now, some of the other things that were kind of interesting is we had talked about what was happening in crude oil. And this was something that we had, mentioned how crude oil had developing institutional buying. We pointed out that Commitment of Traders report, and the Commitment of Traders was showing a growing amount of institutional investors wanting to be long energy, and that has more or less played out. It's been pretty interesting. We also had talked last week about Freeport McMoran and the way it broke this descending trend line, and FCX, the copper stock, and then it had a pretty significant, continuation along with some of the other copper names. We had talked about it here. There was this trend line that had broken, and it kind of broke, continued afterwards. There was some news out of China. So again, right now, I think this is just these are some of the sort of patterns we're seeing, and it just shows that there has been this overall strength in materials. I didn't start off by looking at our normal sort of strength. Because I do think that right now with the inflation numbers, we have to be careful. We had talked a lot about materials. Look, energy is in the last. Let's look in the last week. Energy is leading, as we had kind of said energy was gaining momentum. We had talked about Exxon Mobil. We had talked about a spread in Exxon Mobil, a kind of potential opportunity of maybe thinking about Exxon, moving above 111 by the end of this week. That spread would have cost about 44 cents, and now it's filled. So we look here at Exxon Mobil. That spread, that was the spread was the person had done this. It was buying the 109s and being short that. So basically, this spread now would be worth about if someone was it would have more than doubled. I'm not sure I can do all the math. If ExxonMobil remains above this level, it would have gone from 44 cents to $2 if it closes at this level or higher. So, we kind of pointed out this kind of tight breakout that we saw in that, and that was kind of interesting. Now, as we look to other options trades, there may be some that have more potential to the downside, especially in gold miners, because there has been this sort of, big rally in things like gold. And at the same time, we are seeing, some weakness now, I think, in the euro and some dollar strength that might actually set up some opportunities in there. So let's see. Those are just some of the things that have grabbed our attention. But I think right now, this idea of just the continuation in materials, the continuation in that sort of trade is in my view now actually kind of in doubt. I think energy, materials trade has had a really nice sort of move. We had talked about the breakout on the weekly chart when it closed above when the XLB closed above 86, and that move has now happened pretty well. But now we're in a spot where there is simply a lot less clarity in terms of the weakness in the dollar and the dovish sort of sense in the Fed that people want to see to kind of confirm that. Again, none of these things are to me like really necessarily say overly bearish. It's just that the opportunity and the risk reward are no longer skewed in as favorable of a direction as they were when we had talked before. Energy, however, may have some continuation here. And I think one of the things that's interesting about energy is that when you look at geopolitics right now with the situation in the Middle East, but also the situation in Ukraine, there really is not, the market has ignored these sort of risks. And I think especially look at the situation in Ukraine. I mean, it really hasn't gone terrific for Ukraine. And I just feel like one day the market could suddenly start to realize, wow, this is not a great situation, and maybe there's going to be some more risk priced in. So I think right now, the market doesn't just act on things as they happen. It might ignore them and then suddenly say, wow, there's a problem there, and maybe that's going to have some kind of geopolitical risk. So I think right now, when you look at something like energy, there could be a little bit more of this sort of people starting to realize the strength right now we're seeing in energy, and start to realize that crude oil has some interesting patterns that I'm going to show you using that new tool. But first, I want to get to just some other things that were happening. First, I want to mention we had talked about both Dick's Sporting Goods and Williams Sonoma. We had talked about the ability of these retailers to raise prices and do stuff with their margins. Dick's exploding higher today, big short squeeze, and Williams Sonoma. Both of these stocks had significant short interest. Both of these companies beat earnings estimates, and both of these companies are doing a good job with margins. Now, last week we went over the 7 key catalysts for stock movement. We talked about things like margin, and I think it's important to realize right now that a lot of these retailers seem to have pricing power. And in my view, one of the underlying positives in this market, I'll just say what they are now. I'm looking at it. When you really think about it, we kind of have three, at least three, maybe at least two, and maybe three positives in the market. One is that we're seeing margin expansion. Companies now, what we saw a lot of weakness in orders and inventory. If you look at the ISM data that we have the last 12 months, really, you saw manufacturing was in essentially recession. The orders were really weak, and companies had really let their inventories go down. And what's interesting now is that means that they don't have to cut prices to move product. And it means that as new products come in, they have pricing power. This might not be a great thing for the inflation narrative. However, it is a positive for corporate profits. And this is, I think, one of the things we're seeing now is that we're starting to see the outlook. If you look at the data that comes out of FactSet every week, and they look at the numbers that come from the different, sell side analysts, all the earnings consensus, we're seeing the margin expansion in terms of the forward estimates are starting to go higher. So I think right now we are in a point here where there is a significant margin story that is a positive for S&P 500 earnings. Another thing is just this idea of the cyclical growth as the economy, as people basically say there's no recession. Now, we talked about this for a few weeks. However, it's not clear to me that all those earnings out there, all those earnings estimates actually reflect the stronger GDP. Stronger GDP, what does that mean for consumer spending? What does it mean for sales overall? So I think right now, like I said, the margins are going to be getting better, but that's the margins inside of the income statement. How about that revenue at the top of the income statement? And if we have that strong GDP, then you might actually see that top line be strong. So you do have a double whammy right there, potentially in a bullish aspect for earnings. You could have stronger margins and then stronger sales. Both of those things could happen and be a really powerful kicker for earnings. Another part of that is that let's see about the Fed. I mean, I'm honestly really baffled by the Fed and what to make of it now. These economic numbers are too hard to decipher. I think we're looking at a situation where, we're hoping for revisions. Last year we got them. There's so much strange stuff with these inflation numbers, especially early in the year. So I'm not going to try to really anticipate that one too closely. I do think, though, when you look at the situation, I think that if anything, energy prices are probably have bottomed. And I think that might be something that actually does turn into a risk going further into the year, is that, people had kind of, we'd kind of had this vision of a weakness in energy prices, and we were right about it. But now the situation is that, as we've talked about, bullish forces have been developing in energy. And maybe only now are investors piling into it. And the thing is, we have not seen hedge funds pile in on the long side in crude oil in a long time. If they start pushing the upside in oil, just the speculation alone in energy can drive prices higher. So I think that's kind of important to think about here. All right. So one of the other things I wanted to show you on my breadth here was that looking at the number of companies making new highs, you can also see here the number of 52-week highs are going lower, but they were really kind of tanking here in the Nasdaq. Fewer and fewer companies making new highs in the Nasdaq. These are the Qs, but this is my MT breadth tab. Breadth. When you look at it though, you can also see that bearish kind of reversal day. We're just kind of lurking below it, inside of it, making lower highs, lower lows. It's real tight. It's not like something yet that is just like clearly bearish. But the thing is, when you think about the situation we have with inflation, now the other thing is, and I've talked about this on next week, we have the Nvidia AI event again. Now I think the thing is that AI is about a year old as a market trend, and as people start coming up on those 12-month gains, that might be another sort of thing where people start to be more interested in taking some profits. So I think right now when we hit that 1 year mark and we get past that event, the other thing I'll say is it's kind of like the last event. We had the a bunch of interesting numbers recently. I think early in the year, one of these companies, it was actually Taiwan Semi in like January. They were the first one to kick off this tech boom. And then you had obviously the strong numbers. Super Micro raised their guidance. They actually moved the market more than Nvidia did back in January. If you look here, when this was when Super Micro SMCI, this was kind of what kicked off the AI boom this year. It was right here on January 19th. Let's look at SMH that day. January 19th, right here. See this breakout in the semis? That was basically, it was Super Micro because everyone knows that Super Micro does a lot of business with NVIDIA. And they said, hey, when Super Micro raised their guidance, that was a bullish signal for the for AI. And this AI boom really started around around January 19th or so, and that's about 2 months ago now. So we kind of had that initial boom last year. Now we've kind of gone, and then we had the boom that kind of started in January. And now, though, we had NVIDIA earnings, all these things, in Microsoft earnings, all these things, they all came through. The market has priced in a lot of this news now. And then when we come up to this next event, it's kind of like, okay, well, what comes next? And I think that's actually something where there's some risk here where they could kind of stall without a lot of catalyst for the for semiconductors. And I think coming up with a year and everything else, I think you got to realize that that's something here where the market might be turning its attention somewhere else. So I think right now, not to say that things are that bearish on big tech or Nasdaq or anything, but if there's a time to be looking for a pause, it could very much come after next week. And again, that's what we try and do here in Market Trends. We kind of try to look at the events that are coming up. We look at where the market has been and where it's going, and kind of just anticipate some of those things that are out there. So next week, with that event and the Fed, it's just something up there. Okay. Now, let's take a look at this trading view idea we did on Intel. I'll kind of point this out because everything you can say about NVIDIA, you can kind of say the opposite about Intel. So, I mean, this to me was just kind of interesting. This the way it gap lower on earnings here, and it's kind of lurked there since. So this might be something here where if anyone is, looking for things that are already kind of weak and potentially getting weaker, a name like Intel here has had a lot of troubles. And, also margins, man, their last earnings report was not good on margins. It says that they are not necessarily in the right spot of the product cycle. When companies introduce new products and are serving growth markets, you should see higher margins. When companies have bad margins, it often means that they're in a dying, commoditized sort of vertical. And, Intel very much fit that bill last earnings season. So I want to point out how it stalled this level. Let's take a look here on the downside of Intel because it's interesting to kind of see this 42 level. And when we look at like 42 down to 40 is something potentially interesting. Let's take a look here at first of all, let's see, the next earnings are on April 25th. Okay. See if there might be any potential opportunities in a name like this going down from 42. The person could click on this, which would be the 42 puts, and they could hold down the control button potentially. These are just for educational purposes. But kind of look at that. Even a spread like this with significant time in it, has a potential risk reward of almost 2 to 1 in terms of something like this could essentially triple. 71 cents for a $2 move, potentially in a name like Intel. So it's kind of interesting to be watching this one here. I think it's also just kind of interesting that if this name breaks, 42, I think this is something to kind of watch because this level here has been, is kind of the low from December. This is a name I think is kind of interesting to watch because it is not one of the big winners of AI. And when you look at it technically, it's a very actively traded name. It has a lot of options liquidity, and for people looking for stuff that might get hit hard, this could be one to be kind of looking at. Now, another thing to me that I was looking at is GDX, the gold miners. So, I mean, people basically ran up the gold miners, hoping the Fed is going to be cutting rates and everything like that. And I think right here, one of the things that grabbed my attention is look at the euro. I mean, the euro here. I think when we look at this, I'm going to make this a weekly chart. Let's jump over to my weekly chart. The euro to me here has a series of lower highs on the weekly, and at this point, it's the, it it seems to me that this is something of a spot where to the upside in the euro here could be difficult because you have these weekly highs. Just these these lower weekly highs at this point in time are creating something of a drag here. So I want to kind of point this out that if a person is looking for something like, you know, a pullback in GDX, because remember, when the euro goes up, gold typically goes up. You can look that up if you want the reason why and just how it's priced and everything. But historically, gold has been a weak dollar trade, and I think when you look at this situation right here, it's had a really big move up. So what would happen if a person said, you know what, after the Fed, remember, one of the principles that we often consider is the market will price in news before it happens, and therefore, after the news comes, people sell the news. So you buy the rumor, sell the news. It's possible here that this was people buying the rumor of a Fed rate cut, and now it's going to be sell the news. And so the thing is, how could a person express that potentially in GDX? Well, GDX trades a lot of options. Person looking at GDX here next week would be the 22nd, the expiration of March 22nd. And you could look here at GDX and something like even the 29 puts 22 cents down to something like even 28. A person could if you clicked on the bid, I'm sorry, you click on the ask. I think I did the other one backwards by accident. I'm sorry. And then hold down the bid. You can see this is 16 cents for a dollar wide spread. So this thing could potentially return more than 5 to 1. If it closes under 28, which is right here. So if it closes under this level, it breaks down through 29 down towards 28, that would be something potentially something like gold miners. And I think right now it just seems like at this point in time there is, today's jobless claims were decent. So you have a situation here where the market can go back to, potentially being a little bit less confident that the Fed is going to do what it's doing. And so I want to just kind of that the Fed is going to be cutting rates. So I want to just kind of point out right now, gold miners have had a really big move to the upside, but you still look at this chart overall. This chart is not especially bullish. So I mean, I think this is an interesting sort of thing that people might be looking toward. And with the options here, the risk reward might be kind of interesting. All right, just looking at some of my other notes. Let's do a little thing here. Let's look here at our over here. We're going to go to just go to fundamentals, which I think is kind of interesting here. Let's load the S&P 500 because something is happening here. Let's also go to our price grid and load the S&P. This is on MT Main. We did update the MT Main. We have a new version for March. Um, we just made a couple of small changes. I can't remember what they are, but we did share them with you guys. So you're going to data, add symbol, list S&P 500. Now, look on a year-to-date basis. These are still loading. But over here on our fundamentals, I think this is kind of interesting, is that Tesla has really fallen behind. Tesla is now smaller than JP Morgan. And, I think this is something that's just an interesting sort of lesson that, again, the chart will tell you things before, well, actually, let me hide myself again here. The chart will often tell you things before the company does, before analysts do. We've been kind of looking at the overall bearishness that had been developing in Tesla, and I think it's important to realize here that this is now just a situation where it's becoming more and more kind of mainstream to understand that. So it's loading. Sorry about that. It's probably loading the options here for Tesla as well. I'm going to just close this. Sometimes when I'm running Zoom and everything else, my computer just says, too much information at once. See, but essentially, we've been kind of looking at this break under the 200-day moving average, and more or less ever after here, we've been kind of wary of this name. We did a trading view idea here on it that basically how we noticed how it gotten overbought, had gone up to that level. So you want to check out some of our ideas on trading view. We're looking at some of these different things, and this is one we've been watching a lot. And I think it's important to realize that Tesla, Apple, and Meta, I mean, Tesla, Apple, and Alphabet. These companies have not broken out to new highs, and that could mean they're at greater risk of selling pressure. Same thing with a name like Intel. Intel did not break above its old highs. That means it's a greater risk potentially of selling pressures. And a name like Nvidia, if the market pulls back, it could maybe pull back some, but then it just kind of does something more like it did here. It just moves sideways for a few months. And I think that's really that. I wonder what Intel did last year. It's kind of interesting. You can see something like Intel. You know, Look at that when it tried to rally. I mean, this was the year of 2022, but I think the key thing is that when you look at Intel here, longer term, you can see weekly, monthly basis, these are lower highs. And this level here, when it tries to hold this price action, I'd say particularly this low from last month, people might really be concerned if it really closes under that kind of 42 level in particular, somewhere down here. So I think right now this is one that really people are wary here of Intel. All right, now I'm going to bring up some of the stories I want to zip through. When the market is more in a sort of potentially bearish situation, in my view, you want to be thinking less about individual stocks. And one of the principles we have is that when when the market is um, bearish, things get correlated, and when the market, is bullish, you see the VIX coming down. I think we're at a point now. One other thing I want to show you guys is the VIX, because the VIX has been making higher weekly lows here. And again, I don't want to be overly bearish here, but I also want to be at a spot where I have to be. I don't see as it's harder to see as much clear upside here as there was a few months ago. Earnings season has passed. We've priced in bullishness and dovishness, and the data is not really confirming it at this time. So I think we're at a spot now where we got to be careful of this, the complacency, because complacency can work for a while, but then remember, we're not at this point yet where the Fed has started cutting, and we're also not at a point where oil is falling. We're not at a point where the most recent data is in our favor. Things are here a little bit less clear, and I think that that's more my view. And I don't want to be overly bearish, but I think at the same time, like I said. So anyway, what's here is the VIX is pretty interesting. Is that the VIX is just making these incrementally higher lows on the weekly. So again, this is not a terrific sign overall. If you look at the 10-year Treasury yield, I had pointed out the fact that it had a very important level at 434 is going to bring this data up, which was right here. This level goes all the way back to 2008. And I'm not going to pull up that other chart now, but you can see how it stalled at it. And to me, I'm not massively excited in a bullish way about the fact that we are getting back up toward that number so quickly. So I think right here, we have to just be all the pieces are not confirming the bullishness the way they were maybe before. So that's kind of one of the other points here. Now, I want to point this out. This is kind of interesting. One of the things that we had in our rundown here, let me just jump over to the rundown really quickly, was that there was all these people arguing that oil wasn't as good. There was bearishness in oil. OPEC was really bullish on oil, but then the other people at the International Energy Agency were not. Well, guess what? The Energy Agency came around and got more bullish on oil. So that's actually something where it shows that there is kind of a pendulum turning in terms of sentiment in favor of oil moving higher. Now, remember, one of the things we had been saying was that your American supply coming online, you have weak demand from China, and again, we've been talking about that since October. So I think the important thing to remember is that that story now is old, and we have a driving season coming and everything else, and rising, institutional buying in oil futures. So things are not as clear as they were. All right, so this is interesting just to see this because it suggests that there are people out there who are actually now kind of throwing in the towel on the bearish narrative. So there was this other thing here where basically, let me just force some of these to load, but basically this idea now increasingly common that let me just go back to this one, that we're going to see the euro and in the European Central Bank and the Fed are leaning toward June. Again, this is just kind of set, and I want to just point out this is becoming more of like a common view now. And I think we also have to be careful when things are common views because that means the market has them priced in. I'm sounding more cautious as I hear myself speak, and I just want to. So here's the thing about Tesla, about just the kind of growing negativity in Tesla. So I wanted to just emphasize that the bears are all kind of jumping on the bandwagon. And one of the other things about Tesla grabbed my eye was actually thinking about SpaceX, because I kind of feel here like you know Elon Musk might be kind of losing interest in Tesla. And I think politically it's going to be a hard thing. I think that the popular support for green energy policies is likely to diminish going into the next election. And I think that so you have increasing competition from Toyota and Ford and these other companies. And then I think you're also going to have, first of all, investors now care less about ESG, and they care more about AI. So from a growth perspective, the ESG EV thing is no longer the current thing. AI is the thing now. And then the other thing is that you basically have well, you have margins. I mean, you have weakening demand potentially. You have less government support potentially, competition. So all these things, and now Elon Musk is interesting that the attention is just shifting there. So I'm seeing things with Tesla here that to me look like there's still a lot of things that are kind of unfolding in a bad direction. The downgrades and I almost feel like you got to be careful though. The better SpaceX does, and the more people get excited about SpaceX, it could just get worse and worse for Tesla stock. I've seen these things, before, and Elon Musk is a personality. All right, EV euphoria is dead. Automakers are scaling back. There we go. So I think you have got to see that. That is part of the thing, and part of the problem with this also is, the as car prices fall for the electric vehicles, it reduces the resale price of cars. So it's one of these narratives now where people are like, I don't want to buy a Tesla because if I want to sell it later, I'm going to take a total haircut on the selling price. And that is actually a risk now. So I think Tesla does set up for a uniquely bad scenario here because they have a new vehicle they're going to be launching next year. And I think right now it's you're in a spot where there's already weakening demand, increasing competition, but also if you want to be buying a new car, a new Tesla, the question is, do you want to be buying the old model? Or do you want to wait for the new one? And that might actually pull forward or just delay people's demand for it. So I think right now, these things we got to be careful of a Tesla. There's a lot of these things that are building, and when you have a stock that still trades at a relatively high multiple, there's it becomes more problematic. I think we gotta bear that in mind. So this is interesting. We had talked about what was happening at Netflix, and I thought it was just interesting. Oppenheimer basically saying similar things that we said before about basically the fact that business transformation is one of our seven key catalysts. This company transformed their business with their crackdown on paid sharing, and what this actually does for their business model. It's positive on margins, and so I think this is interesting here. And Netflix is in this interesting sort of space. It's its own niche company. It's not AI. It's not semiconductors. It's not e-commerce. It's like its own thing. And right now, the fundamentals and the overall dynamics of its business, um, you know, are seem to be in that positive sort of direction. I think this is interesting here. We had talked last week about the potential for Netflix to continue up to, I think, 650. Then we want to just kind of bear that in mind. They report early in earnings season, probably about 5 weeks from now. If we look over here on our other platform, it actually tells on this other chart. Netflix earnings are estimated here for the 16th of April. Now, remember, if you want to see earnings, you can go to our earnings date tab here and you can import a bunch of stocks. We can just import, for example, the NASDAQ 100, and it'll bring in all these companies and it will tell you when the next earnings date is. It takes a couple minutes to load, but you can see here as they start to kind of populate. So, this is some of the things you can do. That is the earnings dates tab on the MT main workspace. All right. So, anyway, the Netflix narrative just kind of continues to unfold. There's another positive out there. Goldman Sachs says as companies get more profitable, they will increase buybacks. So another thing that is interesting. Like I said, I don't want to sound overly sort of negative, but I just think right now it's a question of the market's had a really good run, and a lot of positive news is priced in. We're starting to see interest in real estate investment trusts, commercial real estate, stuff like this. I'm not sure how much I care about this. I mean, the fact is that some people try to catch a falling knife and stuff, or people have this, there's certain kinds of investors who love real estate, like insurance companies, pension funds, and stuff. So I'm not sure we really care what they think overall, but I do think it's interesting that we're starting to see more evidence of interest in commercial real estate. There was another article I saw recently about hedge funds starting to buy commercial real estate and stuff. So that was interesting. Now, let me just load these others. So this is an interesting note this gentleman had that I look at sometimes. He does this thing called calculated risk. This guy on wanted to just jump over here, and he was just looking at this is now. I have too many tabs. I apologize. I'll just start. I might as well just. Oh man. All right. Basically, they're pointing out here is that rents are starting to really slow and is potentially positive for inflation. This is one of the things the market has that we're hoping for and we want to see pan out. And this narrative just continues to build the idea that there is a slowing pressure in inflation from rents. The one thing I'll say, though, is that we haven't seen it in the actual data that the government looks at yet. And it just remains something of a thing in the background. I am not really sure at this point whether it's possible the Fed is going to say we don't really care about Fed. Maybe we'll just let inflation stay at 3%. I'm increasingly hearing that conversation. The Fed will let inflation stay at 3%. Um, because of the fact that they don't believe the real estate number or the housing number. A lot of these things, I'm just hearing that more. But again, these are all things that are just nothing is super clear yet, unfortunately. And from a trading perspective, a lot of good news is priced in. So it's interesting here that there's a note just from Goldman Sachs that companies are seeing the labor market being kind of back to normal. We saw that with last week's jobs data. We saw unemployment ticking higher. We saw the wages lower than expected. So I think these things do continue to show there are a lot of things that are still positive that point toward a moderating inflation. So it's not just one way or another. So there's another interesting note here from Bank of America. Carl Quintanilla at CNBC retweeted this about how consumer balance sheet is very strong. Most consumers have their mortgage rates fixed in. So even with interest rates relatively high, they're not getting hit by it. So I want to just kind of point this out. There's a note that's out there. A lot of these things, though, again, very well may be priced in. Now, talking about being priced in, Top CFOs are bullish on the Dow and dovish on the Fed. Okay, got to be careful when everyone says something. Again, it might be priced in. I thought it's kind of interesting here. Another thing about being priced in, Kathy Wood is selling Coinbase as it goes higher. Also, just kind of interesting here. Um, Coinbase is trying to do this thing when they sell bonds, you do with convertible notes that protect stock investors. Again, when companies start to find ways to sell convertible bonds and stuff like that, also it reflects, it says management saying, you know what? We think our prices are pretty high. Maybe we should like find ways to take advantage of it. So these are kind of signs of people selling the top. So there is this thing here in China with these copper smelters. I mean, basically, for some reason, China cut copper production, their output of finished copper. I guess it starts as an ore, then they basically turn it into some kind of like copper bars or something that they then that's the actual commodity that trades. The pricing of copper is going to be for refined copper. So they're reducing the production at their copper smelters, which means less copper entering the market. Copper had an explosive move on that yesterday. Look at this is the copper futures at sign HG. Big move on that. Um, Again, this is something that we've been kind of talking about Freeport McMoran and Tech as starting to do things. And now I think it's more a question of um, it's had a decent move for now. And this might be the beginning of something. Let's look on a daily at this. This could be the beginning of something, but you can also see that a lot of people might view this as being kind of priced in, and maybe we have to get past the Fed for it to continue higher. But I want to point out it's interesting to see what's happening in copper here. There could be some continuation in it. Um, and it's just an interesting signal. We haven't seen something like this in a while. And again, it kind of fits into the narrative we have for today's post, which is basically this overall strength in metals and energy and some of these commodities and stuff. So, the moves have now happened though, as we kind of had discussed last week. And now it may be that time when you kind of sit, wait, watch, and consider and plan other opportunities. For a potential. If people are going to look for continuation in these, the potential might actually be a week or two from now or after the Fed, something like that. So here's the earnings date that's populated. I'm just going to continue this thing about China here. So there was this thing in Russia and everything else with their refineries, and we had a big draw of crude oil. The oil inventories are tightening again. So these things all kind of fit in that same sort of narrative. This is the thing I have been looking at, how OPEC, basically is more bullish on the demand for oil. There's this note that Goldman put out. I think it was Goldman Sachs. No, it was CNBC was summarizing a series of analyst notes talking about silver. Now, we've talked about silver from time to time as well. I would just mention that if we do enter more of a commodity cycle, something like silver here, this is silver futures, SI, it really hasn't gone anywhere in a long time. But when this thing can move, it can be a very dramatic mover. So I continue to watch here to see if we might have some upside in silver. It's interesting to see here. I was trying to break above this level basically from, when was this? This was back at the end of last year, from like this is the daily chart. So we're looking at this high from back here in December, and then you have this other high that we basically had at 2 points last year in July and then in December. So could be interesting to see here if silver is at the beginning of something. Now, we had talked about this movement in materials, and if we are going to have a dovish sort of Fed cycle, that is also something that historically the textbook would argue that is a positive for commodities and metals, silver and copper and things like that. That's something that I'm going to be looking for potential sort of opportunities in. Although I will also mention the fact, like I said, some of this movement has now occurred, and I think it might be something where we have to be waiting a little bit more through the Fed to actually get there. I think most of these other things I wanted to. All right, I'm going to just jump over and show you this other thing that I created that I wanted to share with you guys. So go down to the bottom of our rundown. It's interesting. The Russell tried. I did this last night. The Russell is actually breaking. I should mention here. If you look at the IWM here is actually breaking a potentially important level. So for me, this is another sign that things are maybe not as wonderful as we had kind of hoped. We had this, it was trying to hold this high, and I think this now in the small caps is another thing to be kind of wary of. Um, I'm not sure I see any immediate opportunity in it, but I also think we have to just kind of recognize that this was an important level it had to hold. This 8-day exponential moving average is coming down. This is now something that, if anything, this is not really what the bulls wanted to see. And people looking for this to kind of move to the downside here might actually be looking deeper down this range to go back down and fill and chop around in here. So this move in the IWM was something that today went against what we had been looking at in the notes. Anyway, all right. So Bollinger Band with range. Now let's just go here and very quickly. Let's just go here to crude oil because that's one of the things that got my attention on this. Let's add a few things. We're going to go to studies, add studies. As you can see here, this is going to bring up a dialog box. We're going to now go to first Bollinger Bands. Bollinger Band. I'm going to hold down the control button, Bollinger Band bandwidth, and Bollinger Bandwidth range, and hit OK. Now, these are my Bollinger Bands that will appear in the top chart. I'm going to just hit OK, accept them. Now, Bollinger Bandwidth. This will come up in the lower study and show if the bands are wide or not. And then this is my new one that I'm giving you guys, Bollinger Band with range. This is going to show you where how tight historically the bands are. Now it's important to realize that if you look at, different stocks, the bandwidth is basically, you know, it's different for different companies. A more volatile company is going to have a bigger bandwidth. So you can't just say, I want to find stocks that have a bandwidth of, under 20% or under 10%, because for a company, for a volatile stock, its narrow bandwidth could never go narrower than 30%. And then for a company like, I don't know, like a really, slow moving stock like Berkshire Hathaway or something, it might have a very different dynamic. So what we're doing here is this will actually show us where the current bandwidth is relative to its historic level. So if you look here, these are the actual Bollinger Bands. And you can see when things stop moving, the bands tighten. So you can see here that as the bands tighten, this thing, Bollinger Bandwidth, will go down. And you can look at it and eyeball it and say, well, yeah, it looks pretty narrow to me. But it's interesting to look here is that what this will tell you is this will tell you where it is in its range. It will tell you when it's kind of hugging a low. Now, what's interesting about this is that this is going to be the same for all companies. It's going to range between 0 and 100. So it doesn't matter if it's a super volatile company or a super stable company. This will give you essentially an oscillator going between the two. And you can see right now, or when I first set this up, that oil was basically sitting at a super unvolatile level. That was the reason why I put it up there. Now, another one that's interesting is look at Goldman Sachs. Goldman Sachs was also at a spot here that has this incredibly tight range. Look at these. Look at the Bollinger Bands on this thing. Incredibly tight. Look at how tight this bandwidth is here. And look, it gives you a 0. That basically tells you that today's Bollinger Bandwidth is the narrowest it's been in this interval of time. Now, if you want to have a longer time frame, you go to this and you change the length. This is set to 20 candles. And this is also set to 20 candles. So you can now put this into radar screen just for the heck of it. Let's go over here to our to something like Price Grid, and I can just now go and I'm going to go to Studies, Add Study, Bollinger Bandwidth range to show you how this will work. So again, the point of some of these things is that for oil, it tells me that basically move this down, just move it to the, no, hit OK, and you're going to basically see it's going to has to pull through a lot of data to calculate this. But this is going to show us companies that are trading in a real kind of volatility squeeze. Now, I want to just kind of point this out. Another one last thing that a person might want to do is there is this other indicator called Bollinger Bands percent. So studies add study, Bollinger percent. Wait, sorry, Bollinger percent. All right, Bollinger percent B. Bitcoin's moving lower. I've got an alert on my other screen. So this is going to tell you when stocks are above or below their Bollinger Bands. So when it goes up high here, you can see that this was Goldman was above its Bollinger Band. So this can also kind of tell you where it is relative to the Bollinger Bands. The main thing I wanted to show with this is that, it was very interesting to me to see how tight some of these things were, especially things like gold and stuff like that. So this might be a tool you guys can find useful. A lot of people like Bollinger Bands, but like I said, here you look at something like Goldman. Here's just an example. For Goldman, its Bollinger Bandwidth now is something like point, it's basically 3.5%. It's an incredibly tight bandwidth for something like Goldman. But then if you look at something like crude oil, crude oils was something like 4.4%. Let's just add a volatile stock in here, like SMCI or something, right? I mean, look when it was in a tight range. Its Bollinger Bandwidth range there was 19%. So when SMCI was tight, it was 19%. When Goldman is tight, it's 3%. So the problem is that you cannot compare these numbers of SMCI and Goldman because they're different relative to each other. But if you use the Bollinger Bandwidth range custom indicator that we included in today's zip file, you can actually see here you would have actually gotten a reading here on this of like under like 10% on the Bollinger Bandwidth range, which would have shown you here that this actually was a volatility squeeze, even though the volatility was 20%, as opposed to something else which never goes to 20%. So this is just some of the ways you can customize indicators using TradeStation and easy language. Wanted to share with you guys because I know that you guys like that. So we will be back next week. I hope everyone has a great day. Remember that we have the Fed next week before our next webinar, and we also have that the event with NVIDIA next week. And Microsoft also has an AI event. Hope everyone has a great day. I'll see you next week.